The S&P 500 price in the aftermarket hours at 5:08 p.m. Central Time on the 28th is 43.08. And the lone gray area, which is plus or minus 10 points from current price in the aftermarket hours, is 4308.65. This weekly 2018 broadening top and dashed red that we've looked at a few times. And one more time in the weekly chart, it's the top of this broadening pattern here and extended out to current price. So you can see in the thumbnail the bar here and where the dashed line in red is at. So it's right on top of that. And here's the bottom of the cloud, 26 bars back at 4331.58. And to get through that, it has to go through the weekly diamond bottom line 2 that we just looked at. And right above it is the pitchfork level 2 at 4338.38. And then the price flip to the sell setup 1 count at 4337.44. So that's 4 bars back, the closing price. And here's the pitchfork and uptrend lines chart here, and you can see the pitchfork here, and this level is right there, and right before it is 4325.28, and that's a level that I did not mark as green, but that's the daily horizontal line from 07/2021, and that's the top level of this bottom range in light blue at 4325 right here at the very top. So it gets up to there and gets above that, then it's back into no man's land, and below the gray area here is a pivot point as the closest point, 4294, and the closest level below that is S1, a moving target, and the 200 exponential moving average 4265. And get below this level intraday tomorrow on Friday, and it will be mayhem in the S&P 500 as it's a big expiration date for options. So get below there, and there's all these levels in the 4230 to 4240 range. Daily Bollinger Band, lower band, daily channel 3 low. The measure from the pennant breakout in the weekly chart that we looked at a couple of days ago, the top of the super bullish wedge going way back along with this horizontal support line here that's a companion to that. Then there's the lower Stark band, the weekly lower Stark band, the pitchfork 1 down in the 4229 area, and the bottom of the gap zone 4232.43, and under there is trend factor down 3. And price has visited this area a few days ago, and the inverse and backwards cup and handle measure rule from the handle was met at 4237.81. So this is solely my pattern that I dreamt up. But again, extreme times call for extreme measures. Let's take a look. So I made the measurement from the handle here over on the left. It's backwards and an inverse cup and handle. and I measured it at the open of that red candle for two reasons. It coincides with the high of the previous candle, that long white one there, and the bottom of the handle is flat at the bottom here, so I did the same thing up there. However, the measure rule is measured from over here where it broke down out of, from this trend line here in pink, as that's about where it would be if the cup and handle was not backwards. So in other words, the handle was over here, and that's about where the breakout would be. And so that measure rules 2.4%, and you can see that measuring from where it broke down right here, it's 2.4% right to the top of that zone. And it was nailed on September 27th and had a low of 4238.63. So if it gets under that 200 EMA and starts getting a lot of volatility and nails this gap zone bottom here and then closes underneath it and just keeps heading down, you're still going to want to do some buying around this area then, even though it heads down. And the next trend factor is trend factor down 4 at 4109. And my thoughts on this whole thing is, again, we have the measure rule here, 31.8%, and that's taken by moving or copying this one here from the very bottom of the COVID crash to where it broke out of this pennant formation and diamond topping pattern here, and then headed up. And we can spend an hour and a half going through what happened around here, but anyway, that measure rule is up here, and I said it was illegitimate that it broke out of there and was justified to come back down and go under it and, put your thumb over it or tape a piece of paper up there so you don't see it. But this time, from where the market has been and everything it's gone through, when it broke out over here, you can see it blasted above that measure rule and the dashed red line here from that topping pattern, so it busted out of there. And I'm saying this time, don't put your thumb over there, that this is deserved. Everything that the market has been through, it deserves to break out above this and stay above it. So this area is still very, very important here, and it should just stay above this and keep going. The market and traders and investors have been through too much and have shown great resilience to just blow this for some incredible downside again. I just can't justify that. So it would be the other way if that happened. I would say put your thumb over that if it's a big, huge downdraft, because I don't think that would be deserved. It deserves to go up